Hello, ladies and gentlemen. Good morning and welcome to the show. Listen, I'm glad to have you guys here. Now, today is Tuesday, the 19th of May, 2020. And, you guys value my opinion on things, and I'm always a little bit ahead of the curve. I'll come out with it, and 2 or 3 weeks later, these other people start to say the same thing I was saying. Like, when it comes to this virus, when they were all still not saying much about it or anything, I was on here saying, this is our next Black Swan event. This is the Black Swan event. And now I'm a little bit ahead of the curve. I'm going to tell you guys, everybody out there is holding their breath, waiting for this big second wave of the virus and everything else, right? I think we're in the second wave right now. And I don't think it's going to be, well, anyway, I heard news from Ontario that they're up there here in Canada, we got some big cities in Ontario, just like the United States, and the virus is spread through Ontario and Quebec. We got some big cities like Montreal, in Ontario. We've got Toronto, and just like in the United States, the virus has impacted these areas just as hard as in the United States, and all across the United States, big cities, and the United Kingdom, London, the virus. What I'm going to tell you guys is, I think that we can see the light at the end of the tunnel now with this virus. I think I'm going to use the expression rounded the corner. I think we've rounded the corner on it now. And I think the second wave is already underway, but I don't think it's going to be as big as the first wave, not as destructive as the first wave. And so I think we're rounding the corner on the whole thing at this point. And I'm the first one coming out with this, but I think that we can see the light at the end of the tunnel for it. And at this point, and I think things are only going to move forward as far as the virus is concerned. But don't everybody cheer and everything else, because here's what's coming. We are in a depression. And it's a more powerful depression than the depression that happened in the 1930s. This is an extremely powerful depression. And to give you guys a sense of how powerful this depression is, in the 1930s, we had 26% negative GDP, 26.7% to be precise, negative GDP. Right now, our GDP is around minus 40, not minus 26.7, minus 40. That means it's 14 points lower than it was at the peak of the Great Depression. This GDP numbers coming out of the United States gives us a very good idea of the severity of the situation that we're in and the enormous amount of job losses that we're going to have to deal with. But we do have something that we didn't have during the Great Depression. Accommodative monetary policy. During the Great Depression, they were stuck. They could only produce currency. I almost said money. It's not money. Currency. They could only produce currency if they had sufficient quantities of gold, because there was a gold backing to the currency. And this is why the currency became worth so much more during the Great Depression. People will work for 50 cents a day, all day long. But in this situation that we find ourselves in right now, with the Fed pumping out liquidity, they can pump out endless amounts of liquidity. But what this is doing is it's creating a wealth gap between the people in the one end of the spectrum who are not receiving this, are becoming poorer and poorer because they're losing their jobs, they're losing all hope of how are we going to put food on the table. And I'm not talking about a small amount of people here. We're talking about probably 50 million people in the United States. How are we going to put food on the table? is the situation that they're facing. Meanwhile, the rich on the other end of the spectrum that are receiving this money are becoming ultra, ultra, ultra rich. And, you know, the whole thing is just not fair. It's not fair. We need a system that's fair. You know, it's time for the people to have an economy that actually works. So the virus has created this depression, and we need an economy that's vibrant, where we have a vibrant middle class. That's what we actually need. We don't need an economy that's tiered in a way that the rich are getting richer and richer and richer, and the poor are just losing everything. This is wrong. This is completely wrong. And, you know, as long as they're stimulating, this stimulation, you know, excuse me, this stimulation is all going to the rich. It's set up wrong. It needs to go where it's needed more. The rich are already rich. They got more than they could ever spend in their entire lifetime now at this point, and they're giving them more. They need to have a more equal, fair distribution of money within the system. Anyway, let's get in there and let's take a look at the markets today. Let's start the charts right here, and let's take a look at the price of silver today. $17.30 for silver, and silver's went up 33 cents on the day. And, you know, it's really looking good. But here's the thing. When the silver price starts to go up like this, guys, demand's going to go up too. And there's really not very much physical out there right now at this point. Silver is the market that'll break first. It'll break ahead of gold. An awful lot of people do not know that there's actually less physical silver available for sale than there is gold. And the reason for this is because they use silver in industry. They use it. They're using it all up. They're putting it in televisions and in cell phones and everything else, and all those items end up in the landfill in the end, being plowed under by a big bulldozer, and it's not being recovered, the silver. Whereas gold, they melt it down into bars and they store it away in vaults. This is what they've done for centuries. So what's happened is they've ended up accumulating more gold than silver through accumulation. And so the actual physical silver that's available out there for sale, now I know there's a lot of silver, a lot of people hold silver, but they're not selling it. They're watching the price go up right now. They're happy that they have it, but they're not selling it. That silver's not on the market available for sale. How much silver's out there is available for sale right now? When you have to consider that an awful lot of the silver that comes in from mines that are not primary silver mines. These mines are mines that mine things like copper and lead, zinc, tin, you know? And now those mines are closing because there's not much demand for things like that because the economy is slumped off. And so silver is a byproduct of those mines. And because those mines are not mining for things like tin or zinc, then they're not going to get any silver either to go into the marketplace. And, you know, I think it's like 60% or something of the silver. I have the numbers, but it's a lot. It's a large quantity of the silver that comes from non-primary mines. In other words, it's a byproduct of mining, say, copper. Okay? Those mines, how much demand is for copper out there right now? Not much, because the economy's dead in the whole world, you know? And so soon, with demand picking up for bar and coins on silver, we're going to see inventory shortages start to pop up, because as the price of silver goes up, more and more demand comes on the market. People want to own the real physical, tangible asset. They don't want SLV. Okay, 1731 today on silver. up 34 cents. Let's take a look at, we got to check gold. We can't check silver without checking gold. Gold's up 570 on the day, 1737. Now let's take a look at the cryptocurrencies. 265.9 billion. Bitcoin dominance is 67%. $9,693 for a Bitcoin today. These are the only two ways out of is cryptocurrency, gold, and silver are the only ways out of the fiat monetary system. Everything else you buy. And by the way, in order to really get out of the fiat monetary system, you have to own the precious metals. You can't have it in an SLV or a GLD, which is the paper short contracts for these metals. You got to own the actual physical metal in order to actually be out of the fiat monetary system. So you listen, guys. You can have a portfolio where you own stocks, you own bonds, you own money market accounts, you own ETFs, you own all these different things, right? And if the current world financial system were to entirely freeze up and all those assets were to go to zero, you would have nothing. Okay? But now picture a guy and he's got all those things. He's got a portfolio with stocks, bonds, mutual funds, money market account, ETFs, and everything else, right? And it all goes to zero. But he also has one tube of American Silver Eagles. Well, all that other stuff would have went to zero and worth absolutely nothing. And the only thing he'd really own then at that point would be his tube of Eagles. That's all. That's all he'd have that's actually worth something. Because all of these financial paper products, if the dollar goes to zero and all the other fiat currencies go to zero, all this other stuff is going to go to zero too. Let's take a look at the Dow Jones Industrial Average. What we're looking at is it's down 35 points today, 24,561 on the day. Down 35 points for the Dow Jones today. Let's take a look now at crude oil. Crude oil is 32.25. It's up 53 cents on the day, or 1.67%. And now let's take a look at U.S. Treasuries. And the yields are falling today. We're looking at 1.43 on the 30-year, and we're looking at 0.71 on the U.S. 10-year, and it's down 3 basis points on the 10-year. Now let's take a look at the U.S. dollar index, 99.55, and the dollar's going along sideways. The dollar's been staying right close to 100. But you have to understand, all the fiat currencies are all being printed into oblivion right now, all of them. And so the dollar is just floating with all of them down on a race to the bottom. And so this dollar index is just a comparison of the dollar to other fiat currencies. So the dollar index can stay high even though the purchasing power of the dollar is being completely destroyed. Thank you guys for listening to my show. Give me a thumbs up, and we'll catch you guys in the next episode. Bye-bye.